I'm happy to welcome you all to the 40th Annual General Meeting of your company. Thank you for your presence here today and continued support. As you all know, your company is still one of India's leading manufacturers of elastic and narrow fabrics. This year, your company has achieved a marginal growth of 4% in revenue. However, due to better mix, profitability has increased by 8.5% year-on-year basis. The Indian textile market and apparel market size was about $165 billion in 2022 and is expected to grow at 10% CAGR to reach $350 billion by 2030. During the financial year 2023-24, the company has recorded a net profit after tax of rupees 5.85 crore and generated revenues of rupees 63.63 crore on standalone basis. In addition to that, profit after tax wherein revenue from operations on consolidation basis stood at 97.88 crore with a net profit of 10.24 crores. Dear members, as you know, Premco Global Limited is a member of the Technical Textile Association. I would like to give you an insight of the future growth prospects of this industry by highlighting some of the key parameters as per the Textile Committee and published reports from Statistics Department of GOI. India's export of technical textile products grew from $2.2 billion in 2020-21 to $2.85 billion in 2021-22, registering a growth of 28.4% year-on-year. Exports are expected to grow at $6 billion by 2026 and expected to reach $50 billion by 2047. Further, we at Premco strive to maximize capacity utilization in India and Vietnam by concentrating on new customers and innovating and expanding mix for its products. Considering the results, your directors have recommended a final dividend of rupees 2 per share for the year ending March 31st, 2024. The same is in addition to the first interim dividend of rupees 3 per share, second interim dividend of rupees 3 per share, and third interim dividend of rupees 2 per share paid for financial year 2023-2024, aggregating in a total dividend of rupees 10 per share for financial year 2023-24. We also wish to inform our shareholders that the company has successfully commissioned the phase 1 of the Umbergaon unit. In conclusion, I extend my deepest gratitude to our shareholders, esteemed board members, KMPs, dedicated employees, and valued partners. Your confidence in the value and the capabilities of this organization inspire the management and staff to face any challenge with spirit and dedication and determination. In particular, I must give special thanks to my colleagues, staff, and all of you who have joined this meeting today. We are ever grateful to you for showing your support. Now I request Company Secretary to carry forward the proceedings of the meeting. Thank you.
I thank you all the shareholders for taking out the time and going through all the details, the financials, and it gives a tremendous pleasure to reply all your queries. Without wasting the time, I will try to brief almost all the queries, but in case something is left out, then we will definitely revert back on the emails. There being short time, but definitely we'll try to comply with almost all the queries. I'm just reading out some of the replies, which are many of the questions which has been are common, and our shareholders are worried about the future with respect to new plant and capacity utilizations and future market growth, and of course outlook of 24. So I will just read out for your benefit. The replies are as under. Company recorded a top line of 103.21 crores, including the other income, on the consolidated basis, which was higher by 7% as compared to previous year and lower by 18% as compared to year 2021-22. The standalone revenue stood at 67 crores as compared to 73.04 crores of previous year. It was lower by 8% as compared to previous year And if we compare it 21-22, it was lower by 23%. The decline in revenue is typically due to various uncertain global conditions after COVID, post-COVID, and slow down in US economy because our major exports also go to the US, and poor retail sales in India. In the rural area, the demand has not picked up so far in a big way. As far as textile sector is concerned, I'm specifically referring to textile sector. The exports has since recovered what we were doing in 23, 22, 23, and looks better than 22, 23. However, still it will take some time to achieve the past glory. In 21, 22, we did the exports of almost 100 crores. So to achieve that, it may take some more time. Gross margins. Company's consolidated EBITDA stands at 19% in 23, 24. And consolidated profits stands at 10 crores. This has been in the backdrop of rising raw material prices. Some of the shareholders referred that the prices of the raw material has come down, but for the benefit of shareholders, we would like to tell that the raw material prices like rubber, nylon, packing material, freight costs, everybody is aware there's a war going on between Ukraine and there is a rise in the freight cost. Even the local road transport, the costs are up, they are not down. The operation in India has a lower EBITDA due to revenue from US markets were affected, and we are hopeful for the revival current year and target for profits for 21-22. We stand to we think that our sales will further improve by 10% in current financial year 2024-25. Capacity related queries which were raised, and all of them wanted to know what are our present capacities. The replies are as under. Last year capacity utilization in the existing units was approximately 70 to 75% depending on unit to unit. I'm not going into further details, but that was what normal full capacity will be between 85 to 90. So we have achieved around 70 to 75%. We completed the initial trial phase price production in the Q1 of 2024 for the Umargaon unit. In the current financial year 2024-25, we expect to achieve approximately 80 to 85% of the capacity utilization. That's our target. It will be almost full capacities for the existing units. For new capacities added during the financial year 24-25 phase 1 of Umargaon, and still it's on further improvement. The Umargaon plant, we have spent almost 18 crores as was highlighted in our annual accounts. The Umargaon plant, once fully commissioned in 2025, will add additional capacity of 50 crores. For financial year 24-25, we expect the turnover of 10 crores from this plant, aggregating to total installed capacity to the tune of 120 to 140 crores if put all the Indian plants together. This will depend on the future demand and product mix. Normally, it always depends on the future demand which will arise in the markets. We intend that Umargaon will cater to both domestic and international markets and will strengthen the new products through R&D and other new markets. New product lines. Company always innovates through its R&D, and we have introduced new technology like lip tape, products manufactured through recycled yarn, microelastic, lip elastic, and cord elastic. The new markets, we have already, with respect to markets penetration, the reply is as under. We are already catering to the Bangladesh, Vietnam, North and South America, and other South African. We also have South African customers. We do have the sufficient professionals. Somebody asked that why you are spending so much on the other professional charges. So we do have the sufficient professional employed to give the effect to the international market, and we are trying to reach to the European markets and are almost in the breakthrough stage in one of the biggest customer vendors, for which the necessary audits are underway, and hope to bring the shareholders the good news very soon. Future outlook. In 2024-25, the company expects its top line to grow by 10%. Our top line was 103 crores in 2023-24, and EBITDA percentage-wise will be maintained as per 2023-24. Our plant capacity utilization, as explained above, will be in the range of 80 to 85%, using Umargaon plant facilities for the part of the financial year. Customer base. We cater to various customers like Lux, Dollar, Amul, Rupa, etc. These customers work in volumes, and long-term price arrangements are in place with them. Competitors. Our main competitors are Spica, Koinur, Elastic, Legal Tapes, and Ginza. There are other competitors as well, but these are the one of the few main which meet our quality requirements as well. The cost saving measures. Company has been working on the various cost saving measures, thereby synchronization and enhancing the existing plant capacities through modernization, technological upgradation, like Palghar and Vapi and Dadra and Vietnam. Targeted savings will range from 2 to 5%. This will help us to maintain the EBITDA in a rising cost scenario. Listing on the NSE. Company do not have any plans for future listing in NSE, as presently busy with the future growth plans. We already have almost 50 crore plant put recently, so our full attention will be basically to further grow in a faster pace, maybe 2027, as was being requested by various shareholders, and we target the same. Buyback. Buyback limit is up to 1st October, as rightly said by some of the shareholders, and we are well aware of it. The timeline for shareholders meeting and approval is very short. It requires almost 60 to 75 days for shareholders approval. And if we go through directors route, then it is only 10% for the total net worth of the net worth. So the amount of expenditure which are basically the benefit of the buyback will offset the tax benefits which we are going to get through buyback. Better to give a higher dividend. That is the management expectations, and definitely we will look after the shareholders dividend aspects in the days to come. Thank you very much. Yes, Priyanshi.
Thank you, Mr. Tarajan.